Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the NDX, which is the cash market for the Nasdaq 100. And following on from last week's video where we were tracking what we believe to be a minor wave 4 correction, I'm now making the assumption that that minor wave 4 correction is complete, and we are now in a minor wave 5 of an intermediate wave 5 of a primary wave 5 of a cycle wave 5 to the top of the market out into summer. This is what I've been saying for a while now, and it looks a little something like this. So the most recent minor wave action, we've done our 1, our 2, we've done our 3, and I think we've now completed our 4, with the 4 completing prior to the wave 4 invalidation point, which is the top of the wave 1, and we are now going to see in the next couple of weeks push to new highs as we finish off the 5th wave. Now where that 5th wave finishes, we've got a few options to talk about that when we come in and have a look at the closer count, and that is in the broader or longer term time frame part of the greater intermediate wave count here, which of course in time is part of the larger primary wave count, which of course therefore is in part of a longer cycle wave count, and so on and so forth. So we are nearing the top of the market is what I'm saying. I could be wrong. It's possible that this thing just keeps on going higher, and this whole move up into a cycle wave 5 is actually just a wave 1 with a big correction to come before going higher again. These are all possibilities, but the count as I have it currently suggests that the market will top out into summer. Now there is an argument suggesting that the Nasdaq has already topped. There is a possibility, but I'm not going to entertain that possibility until I see some form of confirmation. My confirmation will be any price invalidation of the wave 4 invalidation point here. So the wave 1 is in, the wave 2 is in, the wave 3 is in, the wave 4 is in here. Now if I'm wrong and we've gone 1, 2, 3, 4, 5 to the top here, then the price will come back down and invalidate this wave 4 in point because the impulse wave concluded earlier, and therefore the wave 4 is not here. It was already concluded, and this is now an impulse wave to a new low, or an impulse wave bringing the market down over the next few weeks and months. So I'm just going to stick to that as my point. Now I'm not saying that the market couldn't have topped. It may have done, but there's no point calling a top until you've got confirmation of it, and we could get confirmation within a matter of minutes if it were to break down at the start of next week. If it continues higher, we can assume this count is still correct. So on that note, let's zoom into the more recent price data and see what we can see here. We'll come down to the 1 hour time frame. So if you recall, if you don't, go back and watch my previous NDX video. It was about a week ago. We were roughly in this neighborhood here at the time, and my assumption was that we were working on an ABC in a wave 4. Now we can count this as ABC, but I've labelled it WXY for ease of labelling for the way I've counted it. So essentially I saw that we'd had a 3 wave move to here, and we'd had a 3 wave move to here. So my call at the time was for a 5 wave move down like this, stopping before the invalidation point and then off into a new low. I think I projected a 5 wave countdown on that video. You can go back and watch it, which was a little higher than where we stopped, but only marginally. I was still expecting 5 waves to come down. Well, I can't get a clear 5 waves down. Like the one I just showed you, if we wanted to count this as an ABC, so 3 waves to here, 3 waves to here, 5 waves to here, I'd have to move 5 waves to here, and then this low is higher than this low, so we'd have to call that a truncated 5th wave, a 5th wave truncation. So we'd go 1, 2, 3, 4, 5, truncation in the 5th, and then 1, 2, 3, 4, and we're on our way up now. It's possible it ended like that, and it's a legitimate count if we look at it that way. But I think I prefer a 3 wave count to here, a 3 wave count to here, and then a 3 wave count to here, so WXY. And it doesn't matter whether it's WXY, ABC, we're assuming the count is concluded and that we're now heading higher. Okay, so if we are in a 5th and final wave, although a truncation finishing prior to the wave 3 is a possibility, it would be extremely rare, so we're always going to stick with the less rare or the more common ideas first. And I think we've got an initial wave 1 off the low into a wave 2, and now we're creating subdivision into a wave 3. So you could have minuet time frame here, then sub minuet 1, 2 here. So we could have just gone 1, 2, 1, 2, 3, 4, 3, 4, 5 interminute time frame, then you get a 4, then you get a 5. This is not projection. I have no idea where these are going to end up. We need to see more price actions from here to guess at where a minute wave will finish. But what we can do is look at the larger time frame, minor wave, and make some projections for the minor wave 5. So let's do that now. First thing we've got is our 61.8% intermediate and primary wave extensions of 1 and 3 from 4. Now I've explained this in the previous video, but essentially if we take the whole length of intermediate 1 and 3 and project it from intermediate 4, we get this number here, 14,191.77, and if we do the same on the primary wave time frame, strangely enough we get the exact same number here. So very strong fib confluence here. What's interesting is that it actually is above the wave 3, where the wave 3 completed back here, so this would be a legitimate wave 5. So this is our first point of concern, well not concern, our first target here at 14,191.77. It would be a legitimate high. It would be a fifth wave finishing beyond where the 3 completed in a perfect legal impulse wave with no overlap in the 4 over the 1, and a perfect place for the market to potentially finish. But it would be a pretty small target for a wave 5, but there's a confluence here for a reason. Now it could just be a sheer coincidence, it means nothing, but it could mean something, so we're going to keep our eyes on that first. Right, so the next target we really need to assume, or to consider, is the possibility of simply projecting our wave 1 from our wave 4. So we take our wave 1 and our wave 4, move up slightly to where we get the wave 4, and we get a higher target here. Okay, so let's put that one on now. We're going to lock this in place, and we're going to put a target here. We'll use a little call out box for this one. Okay, so this is minor wave 1 from 4. Okay, I know what it means. It means that we're taking the length of our wave 1 and projecting it from our wave 4. It's simple enough to understand. Alright, so there's another target. So we've got two targets to look at here. We've got this number here, which is the 61.8% extension for both intermediate and primary time frame 1 and 3 from 4. We've got our wave 4 invalidation down here in case the market has topped. A breakthrough this would confirm that this is invalid as an impulse wave, and therefore we can consider the possibility of the market having topped and adjust our count bearishly to accommodate that. But we won't worry about that until and if this happens. Alright, so in the meantime, assuming we're going higher, our next target is our minor wave 1 here, so let's just put a price call out on that, the price label. There you go, and we'll lock this in place as well. And lock that in place. So this is our next target, minor wave 1 from 4. So then the next one, let's see what we can get here on the minor time frame. If we take the length of our 1 and our 3 and project it from our 4, we find in a very similar neighbourhood, we find our 61.8. So the reason this is in a very similar neighbourhood is because of the depth of the 4. The closer the 4 gets back to the invalidation point, the tighter the wave 1 projection from the 4 and the 61.8 projection of 1 and 3 from the 4 are going to be. They're just going to be a lot closer together the deeper the 4 gets. If the 4 were to come within a tick of the 1, then this would come within a tick of the 1. It's essentially the distance between where the 4 bottoms and the invalidation point, as you can see between the two bars. So what we'll do then is put the yellow on that so we know what it's referring to, and we'll just add a little bit of text to this one. So minor wave 1 from 4 and 61.8, where's the percent key? There it is, percent of 1 and 3 from 4. Okay, bit long-winded, I know, but I understand what it means. Right, so that's all we think I think we need in the meantime. Now the last and final target is the top of the channel, and this is purely based on channeling the 1 to the 3 to the 5, the easiest and most simple method to find a target. So all the way back up here at the top of the channel. Now obviously time frame's going to have a big deal with this, because the further that we go, the higher the price is going to be. The longer we take to get up here, if we're aiming for the top of the channel, the much higher the price could be. So we're not going to, although we've finished the count up here, we're basically leaving the numbers in place to drag down to the price data as the price comes up. So I'm going to leave the Elliott wave count there, guys, for the moment. We are going to see how this price data develops during the next week, and we've got our first target just above the minor wave 3 here to complete 5 legitimate minor waves up, so just keep an eye on that. That's 14,191.77. Then we've got the next target of 14,483.07. This is the minor wave 1 from 4 and the 61.8% extension of 1 and 3 from 4 on the minor time frame. We'll conclude the Elliott wave count there. We'll just wrap up with some basic technical analysis then. So let's just clear the Elliott wave count off the chart. Excuse me. Come back to the weekly time frame. It still makes me laugh sometimes when I look at the Nasdaq and the weekly time frame. It's just mental, isn't it? Right, and so let's bring up our exponential moving averages. We have a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We also have our RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. We should have a volume profile, or is it a case of not supplied by the vendor? I often go through this process and then forget which is which. Note here on the cash market we do not have any volume data, so I might do an update then next time. I'm going to write this down now. Okay, NQ1 ES1. So what I might do is we'll update the cash market NDX count today, and maybe look at the SPY one more time, which is our proxy for the S&P 500. And then next time we come around, I'll move these counts over to the futures markets, and we can have a look at the futures maybe next week. All right, then. So let's carry on. Above the 10 weekly exponential moving average, which is the yellow line here, we wicked down through it, and then we've had quite a bullish candle, maybe not quite a full hammer, maybe because the wick we'd expect to be double the length of the body. It's very close, it could be a bullish hammer. Above the 20, above the 60, miles and miles from the 250, still looking bullish, nice close to the week, getting ourselves above that major moving average, supporting the idea of this being a 1, 2, 3, 4, and another push into a 5 over the next couple of weeks. Right, or longer, depending on how long it takes. RSI has us coming off of overbought conditions. We've been cooling off during this correction. We can see a wave 1, 2 structure here, longer, more consolidating 3, 4 move here. So a push back up into overbought I would expect to see if we are bullish. However, we have set a pretty strong divergence in the RSI here, which has been going on for months now. You know, I've mentioned it in every video. We have high, high, higher high, series of higher highs in price, and a series of lower highs in RSI. A move back into overbought, taking out the recent high and the highs before it, would be very bullish, possibly suggesting a blow off top into a fifth. However, any push further in price to just that first level that we're looking at, which is that confluence of fib levels we spoke about, we could push into a 5 there, top out, and still not set a higher high in the RSI and maintain this bearish divergence, which if we were to break down from there would be very bearish and a likely signal of the top. But we would still wait for confirmation before suggesting the market had topped. So on the MACD, we had a return to some bullish momentum during this run up to the 4th. We've been basically threatening to have crossed back over short over long term. This is supportive of the idea that the market has topped. We do have this big bearish divergence between the high here and the MACD and the high here and the MACD and the high here. We'd have to see a very sudden and violent breakdown into early next week in continuing this crossover of the moving averages, and an invalidation of that wave 4 level we spoke about with the Elliott wave count. That would support the idea that the market had topped, but we haven't seen it yet, so let's not jump to conclusions, and let's come down to the day time frame and see what we can see here. As is often the case in terms of time frame with the weekly and the daily, we are getting opposing signals essentially. We can see that we've come down to test the 60 exponential moving average and found it to be very strong support. This 60 exponential moving average has basically provided support to stop the count from invalidating. So 1, 2, 3, 4, 5 higher. We had support here at the 60 exponential moving average, stopping that invalidation and therefore predicting a further move up. bearish momentum seems to have died off on the MACD, some lighter red bars in the histogram now. The short-term moving average starting to flatten out, maybe starting to curve up. If we do get a pop on the way to new highs and we get bullish confirmation here on the MACD, then we can start looking for those higher targets and potentially push deeper into those further targets that are further out. We did not reach oversold conditions on the RSI either. And we turned around in the neutral zone. So this also, in my mind, supports the idea that we are actually, having reached oversold conditions prior, we're going 1, 2, 3, 4, 5 in the RSI, and we're looking to push back up to overbought conditions again to complete this wave. But there is quite a lot of room. You know, we could come up to overbought conditions and still not set a new high in the RSI while setting a high in price, and get a confirmation of bearish divergence if we were to sell off on both the daily and the weekly time frame. So overall, the market hasn't broken down yet. It still looks like it's got one leg up in it. We've still got bullish support here above major moving averages on both the weekly and daily time frame. Although there is divergence, it's been here for months and months and months, and it hasn't resulted in a collapse yet. But it will one day, sooner or later, unless it disappears and the market goes off into a blow-off top of sorts. So, alright then, that's where we'll leave our analysis for the NDX this week. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like button, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And quick thank you to my patrons. Greatly appreciate your support. We're growing all the time. Discord's growing, and it's great to see more members coming in. And if you are interested in becoming a patron, there's a link to my Patreon in the description below. Go have a read of the tiers, see if there's anything you're interested in. And if you're not following me on Twitter, there's a link to my Twitter feed in there as well. So go follow me. Alright guys, take care, and I should be back with you hopefully for a video either on probably Monday, I reckon. So it's Saturday today, this will be out for Sunday. So alright then guys, I'll be back with you later. Take care, bye bye.